Thank you for tuning into Astor Investment Management's podcast series. This week, our Chief Investment Officer, John Eckstein, and Senior Managing Director, Mac O'Brien, discuss the current economic outlook in the era of COVID-19. Thank you both for joining us today.
Welcome back, everybody, for another edition of Astor's Weekly Economic Review. I think this might be our 20th episode. Again, thanks for joining us. Sabila, thank you for the introduction. As of recent, we have John Eckstein with us, Astor's CIO. John, how are you?
I'm good, Mac. How are you doing?
I'm doing great. Thank you. So every week, John typically sends me an email that goes over all the pertinent information that we're going to talk about. Run us through just real quick a summary of what we're going to go through today.
Yeah, so today we'll talk about another big claims day, the CPI report. I think we should touch on Jerome Powell's speech about Fed policy, maybe some of the high frequency numbers, and then preview next week.
Great. So with that, how about we start where we always start, which is employment data.
Yep. So the labor market continues to weaken. So today, 3 million people filing for new claims for unemployment. So in the last couple of weeks, we've actually gotten a supplemental report about the pandemic unemployment assistance, which is a federal program. The unemployment insurance scheme is a state-run program. There's a special federal program which is kicking in for gig workers or
that's
self-employed
the Pandemic
people.
Unemployment Assistance Program, correct?
Yeah, the PUA, yeah.
Right. It just hit Illinois on Monday. Again, I've talked about in the past, my wife's a photographer. She did not qualify for your typical unemployment, but we claim our earnings every year. So as of Monday, we were able to file under the PUA, and I guess we'll see what happens with that. But you'd have to imagine, you said there's, I see your notes here, there's 800,000 or so this week?
Yeah, so this week that adds 800,000 to the total of new claims for unemployment. So we think about continuing claims, which is the people receiving unemployment benefits, and that does have another week lag in it. But the continuing claims is 23 million, and so there's another 3 million altogether. So that's 26 million people out of work and receiving unemployment insurance.
So John, just to focus real quick on jobless claims, the expectation today was around 2.7 or so million more people filing for unemployment over the past week, and we hit 3 million. So it was worse than expected, right? Talk to me.
I don't take that super seriously, honestly.
Okay.
We're just in such a new era that people are just sort of picking numbers out of a hat.
So maybe not the seriousness is not behind 2.7 versus 3 million, but isn't there seriousness behind the fact that it continues to be around 3 million every single week, and we're not seeing a serious rate of change to the...
Yes, well, I mean, the rate is declining, right? So fewer people applied this week than did last week and the week before. It's declined every week since the end of March number. So that's good. But you don't really expect the labor force to be improving until claims are down to 300,000, right? So it's still like 10 times where they are now. Yeah, I'm not concerned about the miss of 3 million versus 2.5 million, but that you're right. Your bigger point, the absolute number is high. That is very concerning. And like you just said, that number is also understated, right? The 3 million should really be 3.8.
Right, because of the PUA.
Exactly. I mean, so none of it, in some sense, none of this is really new information in the sense that the labor market is terrible and not getting better, I think, is the short answer right now.
Right. And I think the not getting better,
but maybe it's getting worse at a decelerating rate.
Yes. But not decelerating enough, in my opinion, to have optimism about the general outlook.
So one thing that's a green shoot here is that we haven't so far seen sort of accelerating second order effect, right? So claims are declining slowly, but they are declining week after week. Right. And if we were already seeing multiplier effects at scale, then you might think that it could be increasing.
Right. How long does it usually take to see multiplier effects work their way through? And for our listeners, multiplier effect, we've talked about in the past, but if the restaurant, John's using the analogy, has 33% of their tables full, that means that they're using 33% of the linens, the silverware, and the food. And so the suppliers or the restaurants or auto suppliers or the chain, right, that makes the machine, you start seeing weakness within those. Those people get laid off. They have to cut their business, et cetera. So, John, how long does it usually take for second and third order effects to work their way through?
usual is not really, doesn't really apply in this situation, right?
Right.
We're all in sort of wait and see mode here.
Yeah.
Like, this is unprecedented. So we're waiting for the data to come in.
It's almost like you wouldn't expect the second and third order yet, because you still have the assistance working its way through, right? People are still
You do. And so like one big sort of divider is going to be in June, when there's things people have to do for their PPP loans, and sort of like they have to decide, whether they can hire back as many people, or they're going to make it a loan, or they're going to make it try to get it forgiven. So that's one point, right? It's like there's sort of a technical time frame coming up, and then also like there's new Small Business Administration loans that are supposed to be administered by the Fed. Those aren't out the door yet either. Those actually are much more like medium-sized enterprises. I think the minimum loan size is $1 million or something like that. So like your wife wouldn't really want to take out $1 million loan, probably.
right.
For her business. There's still a lot of new information to get.
Yeah. Well, I guess like we always say when we leave the payroll and the employment situation is, we will have to wait and see, right?
Yep.
Well,
I mean, that's kind of years at a time, when it's kind of like, oh no, today's pretty much like yesterday, and I bet you next month is going to be the same as last month, right? And so there's sort of like normal economics, which is kind of boring because nothing happens week to week or month to month, and then there's exciting economics, which is way too exciting.
Speaking of exciting economics, let's talk about some high frequency stuff that you've noticed over the course of the past week or couple of weeks. I
think people should probably be aware of this already. I don't have anything sort of unique, but you do see some things bouncing off the bottom a little bit. You see hotel occupancy picking up a little bit. You see diners at restaurants that use the open table reservation service picking up a little bit. You see TSA, the number of people going through TSA checkpoints picking up.
Talk to me about those numbers, John. So hotel occupancy, was there any drill down in that report? Where are these people coming from that are staying at hotels? Are they people that are escaping the states like Illinois and going down to Florida because they just can't handle the stay-at-home stuff anymore? Where are we seeing?
I don't know. I didn't get that. I didn't get that depth of the report. It's just that like occupancy this time of year is usually, let's say, like 65% of rooms are occupied, and 3 or 4 weeks ago it was 20%, and now it's like 27%. So, and all those numbers are the same, right? So usually you expect 2 million people a day going through TSA checkpoints, and today it's 150,000 up from 130,000 or something like that.
Okay, so just the right
very gradually, and people sort of getting back to business.
And I know in the past you've said that, I'm going to shift over to mortgages. Mortgages, you said that the mortgages to purchase homes, not to refi, but to purchase homes, are fairly close to normal. What time frame is that report from?
Yeah, so they actually dipped a lot a couple weeks ago. So I don't think we've mentioned it since maybe the first week we did the podcast together. And then they did dip an awful lot. But now they're actually back. They're not at normal levels, but they're sort of, within spitting distance of them.
Yeah.
And so, I don't know if it's people who had already had deals lined up, they're moving for a job or be close to mom or whatever. But you are starting to hear anecdotes about people like getting out of Chicago, New York, LA, right? And being like, I'm going upstate. I'm staying there.
Yeah. And I mean, you have Twitter that said that all their employees can work from home indefinitely, like not for the coronavirus, but period. And you have, what was the other big one? Dell said most of their employees can work from home indefinitely. So that might change.
Yeah, Google said for the balance of 2020, certainly everyone can work from home.
Yep. And then you have Twitter saying forever and Dell saying something similar. And so you have maybe people, whatever the case is, you have people that are looking for homes and it looks like applying for mortgages to buy them, which is good. It's good to see people. And I think there's something else to anything else that happens is you get used to something, right? So there's always a period of fear where it's like we can't leave the house and you're staring at people that are walking on the street like, oh, do they have this mystery illness? And then once it settles in a little bit and you get used to it, you just become more resilient to the concept of what's happening. And you might venture out further each day, right? Not necessarily from your home, but with what you're willing to do, whether it's buy something virtually online or just move forward the mortgage because your patience runs thin, you want to buy a house.
I mean, I think that's true. You see that again in some of like the company reports, right? So if you listen to the Visa report, so 12 million people in Latin America have made their first online purchase with a Visa card this month.
What is that 12 million in relative? Like, is
That's
that
20%. That's 20%.
wow?
Of the base.
Wow. Okay.
And there's millions of people in America who've made their first online purchase since the coronavirus. And so, you do think that a crisis can exacerbate existing trends, right? And so, I think the retail, malls have to be worried about that, right? Retail stores have to be worried about that.
You didn't write this on your list to me, John, but that takes me down, and I don't want to go on too many tangents today because we both are butting up against a call in 45 minutes. But you read about any national chain that's in a brick and mortar, right? Whether it's a strip mall or a mall, what I hear is that they have the power to renegotiate their leases lower and lower. I mean, have you heard or talked to me about commercial real estate? Like how much? There were talk about a bubble in commercial real estate before COVID hit. And if anything, this has to really just highlight the vulnerabilities within that sector, that subsector of the real estate market.
Yeah, I mean, I think that people are trying to get their hands around that. I don't have any special insights into the commercial real estate market. REITs have done worse than the typical stock this year. I know that a lot of them are heavily exposed to commercial real estate. And yeah, I do think that tenants have a lot of negotiating power right now, and how that all works out remains to be seen. And I don't know that that's enough to save the brick and mortar shops, though. I don't know if that's enough to save JCPenney. I don't know if that's enough to save a store that moved mainly online. So yeah, a lot of trends, there'll be winners too, right? In terms of, more home delivery and stuff like that. But there's definitely going to be some losers with the existing trends being exacerbated.
Yeah. And that's like, back to jobs. I was watching today and they were saying all the places that are adding jobs are exactly what you just said, right? Papa John's, Grubhub, anything that has to do with delivery or online, those are the places that are actually looking to hire people in this market.
Yeah. So CPI is actually kind of hard to calculate because you have to take into account the prices of things, but then you also have to take into account the basket of goods that consumers buy every month. That can change, and that can change because of relative price changes. Like if beef increases in price relative to chicken, people buy more chicken. But in this case, the basket of goods people are buying is changing for other reasons, right? Like instead of eating 10 meals a week at home, we're eating 20 meals a week at home. And instead of getting our nails done, we can't get our nails done anymore. Yes, the CPI was negative. Core CPI was negative. I think a lot of people might notice that the stuff they're actually buying went up in price, and the stuff they're not buying went down in price, like gasoline.
Well, it's going down in price because people aren't buying it, right? I mean, that's the whole.
Well, yeah, that's true. Yeah, our ancient faith teaches us that when the price of something goes down, the demand will increase and the supply will decrease. So on the topic of inflation, I mean, I think I'm going to want to think about two different time frames. In the short time frame, I'm not super interested in it, right? The numbers are the numbers, and they don't really mean much, whether they're going up or down. It's going to be reflecting people's constrained, opportunities to consume. In the much longer run, like 2, 3, 5 years, we are ultimately worried about the deficit, and is adding all this money going to eventually cause inflation to change? But that's a long time from now. In the short run, I'm not that interested in inflation.
I wrote this down to talk to you about it offline just for my own curiosity, but let's try it and see where it goes right now. You have a deficit. You have this hole we're digging ourselves in, and then you have less people working. Don't know how long that's going to be, which means less taxes collected, which means the hole's even bigger. Then you have businesses closing for good, whether it's 10,000 or whether it's 100,000. That's less taxes being collected. I mean, how deep can the hole get before it becomes just a very, very big problem?
I think it is worth talking about, and this is actually Keynes's central insight, right? Is that there can be times of shockingly low aggregate demand at that point, and occasionally it makes sense for the government to come in and just spend whatever it takes to get aggregate demand up, because the alternative is worse. And the alternative is, in our case, our alternative is depression. Like, there's no question about it. Like, the alternative is 5 years of 25% unemployment and like a disaster. And so, like, we have to figure it out. Is what I think.
Right.
So, I mean, the deficits will go up, but like we pay those bills in dollars and we can do that. Is there some sort of limits? I mean, sure there is, but like the reality is like for the last 15 or 20 years, like no central bank has been able to get inflation up enough to its target, right? So what people thought they knew about inflation, I think is not correct.
Right. Speaking of stimulus packages and all that, let's shift over to the Powell speech.
Yeah, so Powell gave a Zoom talk like the rest of us, and though he could have made a blow for American men by not wearing a tie at his Zoom talk, right? Like Kennedy was the first president not to wear hats all the time, and men stopped wearing hats after that, and so Powell could have liberated all of us, I feel like, from wearing ties on Zoom talks. His main point was probably that fiscal policy needs to do more to support the economy. There's less comedy. We had a brief period of working together on the Hill, and now people are starting to squabble a little bit again. And will there be a phase 4 is up in the air. I think what really is needed is, as we've talked about before, is aid to state and local governments. And I know that Powell supports that, but the Fed can only lend; they can't give people money. Mm-hmm. So it's up to
anti-negative rates, right? I mean, so that was
something. It is. So yeah. So there's some futures markets which are implying that rates in the U.S. will be negative at some point. The Fed is against that, and they will be against that until the day before they make rates negative.
Right.
Whether they'll do that, I don't know. Like rates can. So it used to be there was called the zero lower bound. You can't put rates below zero. And you can put rates a little bit below zero. Like no one's tried -10, but they've tried, -1%. And you seem to be able to get away with that. And, would that help much? It complicates things. Some central banks have, the Bank of Sweden, for example, reduced rates below zero and then brought them back up above zero, saying that didn't really help that much. But the Fed is definitely anti-negative rates.
Yeah, I mean, the round 4 is going to happen, right? No matter what side of the aisle you sit on. I mean, the left side is going to try to put a lot of stuff in there that the right side doesn't want, and then the right's going to say we have to have round 4. But I'm in the middle of the forest, right? There's you can see the forest from the outside, and you can be stuck in the middle of the forest. But in Illinois, they're stretching this thing until probably middle of June, as they are prepping us for right now. And then California said it's being stretched along, but then you have folks in Florida hanging out on a patio having breakfast, being served by a waiter or waitress. So, from my viewpoint, I think there's going to be round 4. There has to be, because I'm in Illinois and we're still locked down and I don't see anything turning around here. But, I know that there's different temperatures, there's different methods across the U.S.
Yeah, and we'll see like what happens. I think there's still a lot of information. We have to see what happens on the health front too, right? Is it so there's a delay of 2 to 4 weeks between getting infected and showing up in the emergency room, and so are we going to see that spike, or is a little bit of social distancing and no concerts and most people wearing masks, is that enough to get us through? I don't know. I mean, nobody knows.
Well, and how much of this, again, this is not a political podcast, but sometimes I think that we've gotten so far down the hole in some states in terms of where they're at from a fiscal standpoint that it almost behooves them to continue this to get deeper and deeper so they can get bailed out. Like how much of this is starting to get political versus...
Oh, you mean like the theory the NBA teams like tank to get a better draft?
Yeah, I mean, it seems like this could go down such a political path of staying open as a state or opening in phases, or actually, like you said, just tanking and then just blaming it all on coronavirus, even though you're in bad shape to begin with. And then you have that whole side of the equation that is going to frustrate the heck out of a lot of people that just want to get back to work. And if you built a business for 20 years and you wake up and the business is gone, like you don't want to go work a 9 to 5. I don't know.
I think the thing is that, you hinted this before too, is that like state revenues are going to be devastated for years. It's not going to, move the recovery forward to fire half of your teachers. Like state and local lost 800,000 jobs last month, right? That's as much as the entire recession.
So say that again. State and local governments lost 800,000 jobs across the U.S. last week.
last month.
Last month, that's the number for the
last
entire global financial crisis in '08.
Yeah. And so one of the reasons that the recovery was so slow was that state and local governments, were running budget surpluses in 2010, 2011, 2012, which meant that they're taking in more taxes than they spend. And so they're cutting services and raising taxes. And that's one of the reasons the recovery was so slow. And it's certainly possible we're going to end up in that situation again. And I think everybody is sensitive to the idea that, gosh, I don't want to bail out Illinois because they, made promises to their firefighters, 20 years ago or whatever. At the same time, this is a national crisis. And if Illinois, California, and New York go under, there's not going to be any national recovery.
Right. So, John, I think that's it for our conversation topics for this week. Next week, we have the JOLTS, how many job openings. And, you were saying earlier that until jobless claims are under 300,000 and they're 3 million now, it's hard to imagine that we'll be having positive net jobs being added to the economy. But we have JOLTS next week, the consumer sentiment from University of Michigan, housing starts, which we've been talking about, the real estate market, and the market PMI. Which two of those are you really keeping a close eye on? Is there anything else from next week that you think is going to pique the interest of the listeners?
So, yeah, I usually like JOLTS a lot, but this is going to be an April number where you're hoping I'm more interested in May numbers. So the sentiment number and the market PMI will both be May numbers. I mean, I think I know what they're going to say, right? They're not going to be rainbows and bunnies. There's also Empire Manufacturing Survey, which again, is a survey made in May. So we'll be watching those. I'll be watching the May numbers most carefully next week.
Great. All right. Well, thanks again, John, for joining us. Everyone, thanks for listening. And we look forward to spending some time with you next week. Have a good one, John. Have a good weekend.
Thanks, Mac. Take it easy.
To learn more about Astor Investment Management's research and strategies, please visit us on the web at www.astoram.com or stay up to date by following us on LinkedIn, Twitter, and our app is also available on the App Store and Google Play. Thank you. Astor Investment Management, LLC is a SEC-registered investment advisor. All information contained herein is for informational purposes only. This is not a solicitation to offer investment advice or services in any state where to do so would be unlawful. Analysis and research are provided for informational purposes only, not for trading or investing purposes. All opinions expressed are as of the date of publication and subject to change. They are not intended as investment recommendations.